Amidst all of this, there are still pockets of strength in certain stocks moving up. Happiest Minds is one of them. They have upgraded their FY27 revenue guidance, so the stock has been on the up and up. Neeraj is in conversation with the management, Joseph Anantraju, as things stand right now. Listening to that conversation.
To figure out that we'll be able to do a 12.5% growth based on the grounds up revenue plan. Also, the traction we were getting in the market on our AI first strategy, conversations with customers, and a build up in the pipeline. It's the healthiest it's been in quite a while, actually. It's built up quite well over the last couple of quarters. And we've had a few large deals that we were able to close in the last month and a half that gave us the confidence that we could shoot for a 12.5% growth, Neeraj.
So Joseph, when you cited accelerating momentum on an AI-first strategy and rapid acceptance, this is what you meant. A few large deals on the back of an AI strategy which clients have recognized and accepted.
Absolutely, yes. Right. If you look at one of the deals that we closed, which is a multi-million-dollar deal, is with a management institute in Southeast Asia. And the central element of it is AI. If not for the fact that we would be able to use AI to transform their operations, their student lifecycle management, I don't think they would have gone ahead with this initiative. Again, for another customer where we are taking on all of their the support of their application platform, we're using a heavy dose of AI to reduce costs. It's more from a software development lifecycle perspective, right? And for another one of our large customers in the healthcare space, where we're building a platform for their new business, we're taking an agentic AI approach out there, which is what attracted them. So as you can see that for all of these, AI has been the underpinning and which has enabled. Apart from this, we've been having conversations with several customers and a few Ps on how we can use, as you rightly pointed out, that there is some concern on the impact of AI on the software development lifecycle, but there are also opportunities. And, with a few customers and a couple of PE firms, we're talking about how can we use an agentic AI approach to address a lot of the modernization of legacy platforms and their tech debt. So this, again, is an opportunity, but this is still in the pipeline, and we're quite confident that, a couple of these should close in Q1.
Okay. Joseph, does it involve having to turn the business model as you traditionally did it quite a bit, or is it an added on layer? I'm just trying to understand whether what you are doing is materially different from what some of the other IT service companies could be or would be doing at this stage.
Sure. So if you look at it from an execution model, I think it's becoming quite different, Neeraj. For any new proposal or any new project take up, and even in existing engagements, in some cases, customers asking, in others, we are going proactively and looking at how we can leverage some of either AI productivity tools or an agentic AI approach to optimize and improve their productivity. So that's something that I think that's changing. You need to have an element of AI in anything new that you start. If you don't have it in your proposal and on day one in execution, I think you will be on the back foot with your customers. So that's a huge change that's happening. From a model angle, I think we are seeing customers move more into giving more ownership, whether it's in a fixed price model or in terms of giving it in a managed services model where possible. I think we will start seeing that movement, and I think it's good as well, because if we continue in a T&M or a extended engineering model, then we wouldn't be able to realize some of the benefits that accrues from using your AI tools and other productivity tools. So I think it's good and moving in the right direction.
Okay. All right. So that's the management of Happiest Minds speaking about the increase in revenue projection for FY27 on account of faster than anticipated adoption of artificial intelligence. And there are people who've been telling you this, that the Indian value chain will not necessarily be left out of this transition towards more adoption of artificial intelligence. It requires people to facilitate. And I think Parag Bhai was one of those people. Happiest Minds, though, specifically, the stock has risen very dramatically, 22% this week. Is it still a buy?
So I would say that, see, Happiest Mind, I will not comment specifically, but I have seen that this stock had corrected also significantly, and now has risen because company has increased its revenue guidance. So, but the bigger message for me in this is that all this entire doomsday scenario for Indian IT services company is actually not true. Right, the enterprises will need Indian IT services to integrate all this agentic AI things into their system, and to understand, because Indian IT services companies will understand the context, which is most important, which is the point made by Mr. Chandra, point made by CVK of HCL Tech. So I think that this big fall in IT actually is a very good entry point.
The deployment gap. But the question is, when you have that deployment take place, is it still a situation where you're pushing the doomsday down maybe 3-5 years once the adoption takes place? We don't need you anymore.
No, I would say that, so first of all, what you are saying, if that happens, it's a front loading of the spending, right? So for 2-3 years, it will be very good, right? Now you can argue for terminal value, right? Now in long term, everybody is dead. So I feel that if 2-3 years are good, then this valuations and 4-5% dividend yields in case of large cap IT companies like HCL Tech offers you a fantastic buying opportunity, especially when the geopolitics are such that oil is at 100 and rupee is going to depreciate.
No,